Alrighty. Today, SpaceX continues to trade up on, well, apparently a piece. So last night or yesterday evening, we got an announcement. We'll see if this goes. Connection stable. Alright. Seems like we're pretty good. Can't find it right now, but I have a microphone that I would like to use. Wow. Found it. Truly the morning drive. Alrighty. Well, that's the 5-minute mark. We're going to get going here. Alrighty. Good morning. Today, SpaceX stock is up again and has been up since the IPO, which again was the biggest IPO that has ever been. This IPO, along with previous Tesla shares, has made Elon one of the richest man in the entire world, and his wealth has been estimated to have reached 1.1 trillion as of the IPO at $150 a share price, and which means I believe that his net worth is far more than that at this moment, with his share price up at 170 in terms of SpaceX And with Tesla not having any severe crashes recently, this valuation should be even higher. So what does that mean? For one man to have $1 trillion plus in value in assets, right? Versus your average man with debt. It speaks to a growing wealth gap. It speaks to issues with the way our economy has been co-opted, um, in my opinion, by large corporations, essentially running the government as opposed to the people. But there's a lot more nuance to this, and it's not as cut and dry as it seems. For instance, let's start with the fact that those shares that Elon has that are worth more than $1 trillion would have to be sold in order to have any value to him other than the intrinsic value of holding the stock. He would have to sell, and along the way of selling, he would have to pay massive taxes, which he was taxed when he received the shares, of course, as well. And he will have to, on top of that, he'll have to watch the market go down as he sells, because as one of the majority shareholders in both of these companies, somebody who owns such a massive amount of wealth in these companies, if he is to sell, the shares will outweigh his sales will outweigh by far any inflows, in my opinion. And I believe he will have to sell and finance, and I believe that's part of the reason that he's bringing his other company to IPO, not just for the company to be able to continue to get more money, right, but also for him to be able to. I'm back. Okay. He would have to sell those shares in order to realize any profit. The share price would go down. I do believe he's selling in order, he's brought this company to IPO in order to gain value for himself, secure some profit. This has been a long business cycle of grinding for him where he's built many companies, and they are of great value. So I don't think that any one man needs that kind of wealth, but I also believe there's a reason for him building such a wealth pile, and that the value of stock shares is misleading. I mean, he did pay taxes when he got them, just like regular wealth. Any of us can put our wealth into shares of many of these companies, not SpaceX, but plenty of opportunities that have grown. Heck, Nvidia was worth $100, was worth what is now $10 based on stock splits only a few years ago. I am saying that Nvidia was over 1,000x for any retail investor who was paying attention for 2 to 3 years and was ballsy enough to go for Nvidia. So are we really upset about a man who just happens to put his wealth into his own company? I would do that if I had a big company that I was putting myself behind. You put your money where your mouth is, in my opinion. And so I think that makes a lot of sense that he has wealth in shares. I think that if it was in cash, it would be the same deal in terms of, would have paid taxes in the beginning, and now he'd be holding on to that wealth, and it wouldn't have grown. But who benefits from it not growing, right? Like, no one, and hopefully the world will benefit through the technology that Tesla, SpaceX, and his other companies have brought to market. I know certainly a lot of rural places that didn't have satellite connectivity, war zones even, are benefiting greatly from the ability to have satellite internet everywhere because of his rocket company. So over $1 trillion net worth. Congratulations, Elon. Blasting off. Now, this morning we received word that the SpaceX rather, this morning we received word that Iran has come to a peace agreement with the United States and Donald Trump. We got word overnight that they had reached some sort of settlement in which we were going to have 6 months of review, 60 days of review of the nuclear enrichment for the country, as well as a ceasefire and an opportunity to have some more diplomacy. So the Strait of Hormuz is to be open, and we're ceasefire. Let's see what happens. Every other time that we've heard a ceasefire called, we've just seen more strikes from the Israeli and the Iran side. Will we actually have peace? Will the Strait of Hormuz be open? And will oil continue to plummet as we were hovering around $100 a barrel just a few days back, and now with this diplomacy being met, oil beginning to plummet, we're looking closer to $70 and $70 a barrel, and I think that this inflection point might mark hopefully the end, not hopefully a turning point in the war. Now, me personally, I think that we're in no better a situation. I mean, in terms of nuclear enrichment, we have no agreement. We had an agreement prior to that Obama had set up. That was expiring, to be fair. We now have no agreement. We're no longer having the weapons inspections that we were having pre-Iran war. We are no longer we're no longer having the same diplomacy that we were with the previous Ayatollah that was saying they did not want nuclear weapons. Now, were they telling the truth? Is there more to this? According to the Central Intelligence Agency, as well as many other agencies, according to the major intelligence agencies of this country, we apparently didn't see any sign of the nuclear enrichment in Iran rising to a greater level of threat. And so, was this all a lie in order to secure maybe more opportunity for invasion into Iran and into Lebanon, and more control over that region for our allies, or did we see a nuclear weapon on the horizon and we took action decisively, and now we are pushing on the Iranian government, hoping for them to come to peace? You know, what the right take is up to you. For me, I feel like I don't see a guarantee that we're in a better place, and we've had to go through a lot of bloodshed to get where we are, and we may be in a worse place. And so I can hope and speculate that maybe there's more to the story than I know, but the fact that I don't know and it's unclear, I can't support what we've been doing. And so I've been grateful. I'm grateful to see a ceasefire, and I've been hopeful that we can come to peace before some sort of major world conflict continues to percolate and comes to pass. One second here. And so this leaves us with the question, where should we be putting our money here in 2026? We have a ceasefire with Iran. We have Elon bringing SpaceX to market, the largest IPO, a giant company that has been working behind the scenes to bring us incredible technology. And I think that signals safety for the other giant tech companies to IPO. I think that signals probably a season of excitement as Anthropic brings and OpenAI bring their products to market and retail buys them in a frenzy. I think that we are likely at a long-term cycle top. This tech cycle is played out, and I'm not saying that right here is the top, but I'm saying that we are well into a topping cycle that will likely play out as we get the IPOs of these major companies. And I think that leaves a lot of opportunity in this market in specific sectors, but it also leaves a lot of risk, right? More risk probably than gain depending on what you're investing in. So unless what you're investing in is in pain already, is a short-term play or a very long-term play, you may be better off diversifying further. I'm not a financial advisor, but in my life personally, I have heavily diversified to, I'd say, about 30% to real estate, because that's a slower moving market, one that's going to be more stable even in a large downturn. And then I put about 30% or so into money market funds, into short-term cash, where I can both buy the dip, but also be earning around 3.5 to 5%, 3.5 to 4.5% on that money, depending on how long-term it is. And I would even suggest that the other 30%, it can be in risky plays. You just want to be ready for that. Like I said, it's either a really short-term or really long-term play, in my opinion, because we are due for what would be the conclusion of a cycle, and that that can go on for years. I'm not saying that that's this month, but if you were to align this tech cycle with the 18-year real estate cycle, I think that in the next year or two, we're going to see a massive downturn or a major downturn, but we're going to push into the next year or two with higher highs, more uncertainty, and hopefully some really incredible technology being brought to market that improves all of our lives. But I think the big thing that will pop the bubble will be that technology won't be all it's cracked up to be and won't change lives the way we think. And that's usually the conclusion, I think, to these tech cycles, is we find that it's just not quite exactly what we were hoping for. So, in the 90s late 90s where we had the internet essentially solving everything, and then not so much. It did solve a lot, though. And so when I diversify and I say real estate, stocks, and mutual funds, I can tell you this. In real estate, if you pick out the right home right now, and you were to be buying in cash, or you're buying with the expectation that you're going to refinance in the future, but that you're going to be paying a bit more in the short term, I think that there's an opportunity in the right home in real estate. Not every home and not every area or city, but with the right search, you can find a home that has wedge equity or value right up front. With stocks, if you're investing right now, in my opinion, you should be investing in companies that are bleeding and in pain. For me, that's been the software sector that has had this negative AI narrative. That AI will take over all of these major software companies like Intuit, Axon, etc. And the case is, in my opinion, that they won't. That AI, one of the things that AI won't deliver on is it won't deliver an individualized software stack. I think that we will likely enough still trust, especially big business, will still trust major companies, like Intuit, for instance, right? Because it's going to be a long time, in my opinion, before we can trust AI. But that, besides the point, that's going to create a wedge in stocks. That sector's been bleeding, and in my opinion, that narrative doesn't align with the fundamentals of these companies, which have low debt, high income, high pricing power, and they just have a negative narrative, really, is the big issue. So, and then finally, mutual funds. I mean, we can hope that the stocks that we are in return us an average of 10% a year. That's a fair hope. That's 10%, and you sometimes experience 20% downturn in the stock market, and I think the odds of us getting one of those that are higher, let's say. And I think Warren Buffett was right when he said that the stock market is a casino right now. And so I'm happy to earn 3.5%, 5% on my stock or on my money while I wait. And that's just, again, a chunk of maybe 30% of my value. But that is allowing me the opportunity to get some guaranteed returns, to have some dry powder if we have a downturn. And I can still have 60% of my value in increasing in equities that will hopefully increase in value, right? Whether it's real estate, again, in wedge deals, or the stock market in wedge deals. So the name of the game here in 2026, in my opinion, to sum it all up with stocks, equities, and the housing market, is to find yourself a wedge, to get in where you see there's a narrative that doesn't match the fundamentals. And you can see that this has strong bones, but it clearly needs the right investor, and the right investors aren't around because there's low volume right now and low liquidity. And so the right answer, in my opinion, to sum it up, is to find the wedge value, whether it is in stocks and equities or ETFs even, right? Whether that may be to you, like right now, whether it is homes and you're finding a house that, maybe it was a hoarder house and it needs some love, or it's a nice neighborhood, but it's the one house that has maybe it has near the street, and so it's getting significantly less attention than normal right now, and all it would take is the market to turn around for it to get a lot more love, in which the market will turn around when we have a more investable situation, and that might be when we have a significant downturn in the 10-year, when we have really low interest rates, and that will happen given a disaster or time enough in a really slow environment for the market. And so I think, in my opinion, we'll head into one or the other with given time, right? So that's why I think you should put your money in 2026. That's what I think about Elon's $1.1+ trillion in equity, and indeed that's what I think about the Iran war potentially coming to a peaceful ending. So thanks for tuning in today. Have a fantastic morning, Tucson and America and the world, and bye-bye.